Welcome, everybody, to the Financial Freedom Fighters podcast. I'm your host, Jacob Sandoval, aka Cash Flow Saga. I have with me my co-host. He is the best realtor in Cleveland, at Realtor Michael Magno. How's it going, Mike? How you doing? It's been too long.
Hey, Jacob. No, things are good. Things are good. Business is still kicking. The craziness has not stopped, at least in our market. I know there's a lot of markets around the country that are a little bit down right now. Some of the bigger ones, some of the ones that had the bigger spikes than we had, but things are plugging right along for us. So
I've been seeing, and it's nice, but I've been seeing Cleveland as a market pop up more and more at the top of these different lists, like whatever list you want to call it, like rent growth lists, just like overall strong markets, because you're seeing a lot of these markets, right? A lot of the popular Sunbelt markets, they're seeing a lot of supply growth, right, Mike? A lot of inventory growth in a lot of these kind of Sunbelt markets, which is obviously hurting both on the rental side and both on just like the sales side of it. But in Cleveland in particular, and a lot of these places in the Midwest, you're just not getting the inventory growth and you're not getting the supply growth that's needed, which is a double-edged sword. Obviously, like we need inventory in Cleveland and in the Midwest, but from an investor standpoint, if you are an owner operator in Cleveland, that is, a tailwind for your business, because fewer supply, less supply means higher prices, both on the value of the real estate and on the rental side. But you're probably seeing a lot of that stuff too, Mike, in terms of Cleveland, like floating to the top of a lot of these lists.
Yeah, I mean, I joke, Cleveland's long from a secret anymore. And, the biggest thing, you end up finding us on almost every list, right? Great place to invest, places where you're going to see appreciation, which is, all well and good, but it makes it a lot more difficult to operate here. You have to look at a lot more deals. And, inventory is still at, what's considered to be like all-time lows. And that's on the retail side, as well as the investor small multifamily side too. So yeah, I mean, it's, and stuff, I'll continue to say it till I can't, but if you price your property appropriately for the market, for the location, you will get multiple offers. So, even on the retail side, it's still bananas. I did my first open house in like 4 years a few weeks ago. I posted a reel about it on my socials. We had 150 people through an open house. Yeah, when we went active on the MLS in that community, we were the only active listing. And it's not like it was in the middle of nowhere. People think, oh, maybe it was in the sticks or something. No, it was in a suburb of Akron. So it wasn't in the sticks or anything like that. So it's just tough. You feel bad. We had 11 offers on that property. Right, 11 written offers. I lost track of the agents that called me and said, hey, do you have offers? Yeah. Are they over asking? Yeah. Then they'd say, well, my client, this was already at the top of their budget. Right. And then they're like, I'm not even, we would have written, but we're not even going to bother. I probably had 6 or 7 of those calls too, where agents, reached out and just knew that their clients couldn't compete. So, it's frustrating for everybody, right? Because I represent a lot of buyers too, so it's just not this awesome thing when you're the listing agent.
Yeah. So I think kind of the main takeaway for you, the listener, is just depending on what market you're in, right? Or what market you're looking for your investment property, you should be very aware of the competition and the supply and demand dynamics, right? You could be in a market where it very much is a buyer's market, right? Because for whatever reason, the amount of inventory and what's going on in that local market, or you can be in a market that's still highly, highly competitive like Cleveland, right? So just be aware, have those conversations with your agent and make sure that you're operating accordingly. But I think this is a good transition, Mike, because the episode for today, we are going to be talking about a topic that I think is, a warning. I want to say a warning to kind of the newbie investor, the person that is trying to jump into the real estate market and they're getting their feet wet. They're trying to get into their first rental property, right? That's the majority of the people that are listening to this podcast. You listening to this podcast right now, you're probably trying to get into your first rental property, right? And there is the allure, Mike, of these companies called turnkey companies. And the reason why we kind of bring this up in tandem with Cleveland, Mike, is because a lot of these turnkey companies, they are positioned in markets that are quote unquote cash flow markets, right? Cleveland, Detroit, the Midwest. So if you are a listener of this podcast and you're interested in Cleveland or the Midwest, you have probably come across these turnkey companies. And Mike has a lot of opinions on these turnkey companies. And so I'm going to pass the mic over to him. But in essence, I'll just give a very simple kind of like explanation and definition of what a turnkey company is. Essentially, they will buy a property, they'll renovate it, they'll fix it up for you. So do all the rehab. They will then sell it to you, the buyer, and it's all fixed up. And they'll sell it to you typically with a tenant already placed, and they will be the property manager. So turnkey in that you as the buyer, you just cut the check, right? And it's all done for you. All the work is done for you, and they'll show you that it's a great return. They'll do all the underwriting. They'll say it's going to cash flow this much. And it's just the easy button. It's just the easy button. And I can say this, being a more seasoned investor now, but when I first started out, you'll see they advertise on Bigger Pockets. They're kind of all over the place, and they have really great marketing. And for me, when I was a beginning investor several years ago, I was like, you know what? Why don't I just try this? And a lot of people have gone this route of a turnkey provider. But as we'll get into in this episode today, a lot of these properties that these turnkey providers are pushing are not all they are cracked up to be. So we're going to dive into all of that, Mike. But why don't you kick us off? Where do we start, Mike? Where do we start with these turnkey companies?
On the surface, right, the premise of the turnkey, it seems like it's a really, really great option for people. And it might very well be in some markets. They typically operate in your lower priced markets that are typically known for cash flow, right? Because you have higher rent to price ratios. And they're coming into areas where there were very depressed prices. So like you mentioned, Detroit, Cleveland, Memphis is another one. Memphis, Tennessee is one where there's a very large operator, and it seems really great on the surface. But if you dive deeper into those deals that you get with those guys, is oftentimes they're targeting some pretty rough areas. And that's the thing that I've seen people, at least in my market in Cleveland and Akron, I've seen them get burned on, is because of location. They end up having evictions, high turnover, more costs associated with it, and it doesn't really end up being turnkey at all. And the numbers that they're ultimately getting, fed are really not that great, right? Like I'm seeing deals on these websites at 6% return, 8% return. Like, I don't know. Like I get you're hitting that easy button, so to speak, and people will look at it and go, well, yeah, I can get 8% in the stock market, but an 8% return in real estate's it gives me tax advantages, yada, yada, yada. A lot of people don't like stock market because of the volatility, or they don't understand it, and they'll stay away from that and they'll go into the hard assets of real estate. And the thing that I've seen in our market, because I've had people reach out to me after buying from a turnkey operator, is they buy properties that just aren't worth what they paid for. That's the biggest thing.
Yeah. So, I mean, there's so many important points to hit on here, because I just feel, one, if you were looking for the easy button, rental property investing is not for you. It's not for you. It's not easy, and you shouldn't expect it to be easy. Does it need to be the most difficult thing in the world? No. But if it was easy, everyone would do it, and everyone would be a millionaire with a bunch of rental properties. That's just not how this works, right? If you're looking for the easy button, invest in index funds, right? Put some money to the S&P 500 every single month. If you want to get real estate exposure, invest in REITs or, passive syndications or whatever, but don't buy a rental property thinking that it's going to be easy. So the whole concept of the easy button is a marketing thing. They want to make it sound like it's an easy button, these turnkey companies, and it's just not. So that's red flag number one. Red flag number two is you as the investor, you have to ask yourselves, how are these turnkey companies making money? How are they making money? If they're offering you these amazing deals that are like high cash flow right off the bat, and it's like a win-win for everyone, how are they making money? How are they making money? And so that's where you have to, your spidey senses have to go up a little bit. And Mike, you can dive into this a little bit more, but they're in areas that aren't that great. And legitimately, the thing that I was like shocked by was I was digging into this a little bit more. And when I looked at the valuation that they gave for one of their turnkey properties, and then I just compared it to what it said. And I know Zillow is not the most accurate, right? Like there's a whole problems with like the Zillow estimate. But if you just looked at it, just compared that basic premise of it, the Zillow estimate was so much lower than what the turnkey had it priced at. But Mike, I mean, you know the business really well. So like, how are these turnkey companies making money?
Well, they're making money because they're doing the bare minimum, right? When people contact us and our team and say, hey, we want to invest in Cleveland, I want to buy a turnkey rental, I go through this whole thing with them about what turnkey really means, right? Because you can go open the MLS and put it, you can open up Zillow or Redfin and type in keywords turnkey, right? And you'll get 15 or 20 things that'll pop up in your search that the agent put turnkey in there somewhere. And that person's definition of turnkey might be a lot different than someone else's definition of turnkey. And that's where you get these wild variances with people's, because what did they actually do? And that's how they're making their money, right? Like, they're making their money because they're basically flipping a house, right? They're flipping a house. They're working on a profit margin, and they're buying very, very cheaply, right? Because they're these big marketing machines. So they get the people that want to sell them the worst houses in some of the worst areas. And then they go in and, they lipstick it. They might replace a furnace. I've seen them where, because the roof isn't leaking, they don't touch it, but yet that roof might be 20 years old or 25, and it's going to need to be replaced eventually. So that's a big thing. I try to tell people is, like, to me, turnkey means that everything in terms of your CapEx would have at least half of its life left, right? At least half, right? So the furnace shouldn't be more than 10 to 12, maybe 15 years old. Your roof should last 10 years, right? Like, those are the big, huge ticket items in our market. Roof, windows, HVAC, right? HVAC's one of the things I almost always do in my rehabs, even if it's only, if it's more than like 15 years old, I'm replacing it, and there's a lot of flippers out there that won't. Oh, it works. So why am I going to F with it? And I don't know. To me, it just doesn't ring well. And then a lot of flippers too, they're not agents, right? So they don't have to put their name on it, where I have to actually put my name on it.
What I want to emphasize is the turnkey providers, they're making their money because they're doing all of the work for you, right? So they are finding the property, they're renovating it, they're rehabbing it, they're placing the tenant. They're also typically the property management company. And while that fully integrated kind of end-to-end solution sounds great for you, the investor, there's just so many things wrong with it. Like Mike said, they're going to take a lot of shortcuts on the rehab because they have a profit margin that they're trying to hold to, right? They can't guarantee that they're going to find the best deals in the best neighborhoods, right? Because they're operating on a kind of volume-based business where they need to get enough deals done, enough sales, enough transactions. So they can't be the most picky about, hey, this is the best location. If they're doing all that work, you as the investor, you can't expect that amazing of a deal, right? So at the end of the day, I think that's where you as an investor, if you are going to go this route, which Mike and I, we don't recommend it. But if you are going to go this route, you also have to temper your expectations. You have to say, okay, if somebody's doing all the work for me, I can't expect this deal to be like a double-digit cash on cash. You just can't expect that because someone is doing all the work for you. Part of what makes real estate an attractive investment vehicle is there are still a lot of market inefficiencies, right? In the stock market, there's arguably no inefficiency in the stock market. If you hear something about a stock like Nvidia or Tesla or whatever, everyone's heard it. It's already priced in. There is no secrets unless you have these crazy trading algorithms that are operating on fractions of a cent faster than everyone else's algorithms. Like, there's no true advantage in the stock market anymore because information is so widely available. In real estate, that's just not true. That's just not true. It's like real estate is literally built on market inefficiency because you, Mike, being local to the market, you're just going to know things that people don't know. And then you take advantage of that and you help your clients take advantage of that. And that's just how the real estate market goes. So that is what makes real estate attractive as an investment vehicle. But if you're giving all that advantage up by saying, hey, I'm just going to take a turnkey company, I'm going to hit the easy button, then you're going to get a subpar investment. That's just what you have to understand. You're going to say something, Mike?
The other thing I wanted to throw in there too is, right, like who, when you pick up the phone and call, I'm not going to name names, but when you call one of these large national turnkey providers, where's your protections, right? Like, you don't have an agent. They don't list these things on the MLS, right? Like, they don't hire an agent. They don't They don't allow me to represent you as an agent, right? Looking out for your best interests. You just have to take everything they tell you to be gospel.
And they don't actually they do the inspection sometimes for you too.
Right. They provide it to you.
Yeah. They're like, hey, we already did the inspection report. That no red flags there. No red flags there. They're like, oh, you don't need a third party inspector to come through here. We already did it.
We don't want to disrupt the tenant, blah, blah, blah. And it's like, come on. What are you hiding? What are you hiding? Are we going to find that fire damage that you hid in the attic? Or are we going to find a poorly patched roof in the back of the house somewhere where you can't see it in the pictures? Or, who knows?
And that's where I get pissed off, Mike, is that look, there are a lot of investors, and let's be clear. These turnkey companies, they do make money. It does work because not everyone listens to the Financial Freedom Fighters podcast, right? Not everybody knows to listen to Mike and Jacob, and not everyone has us in their corner to tell them not to do these things. And the marketing is great. The solution, if it was a true solution, Mike, would be great, right? Would be great. And, I know you've even kicked around the idea of actually starting a legitimate kind of turnkey solution. But at the end of the day, the problem is that it's really hard to actually operate that business model, and the incentives are not fully aligned there. They're just not. And my problem with it is it borderlines just dishonesty in what you're telling the investor. Very simply, I know how to underwrite deals. And that's one of the skills that you should learn as an investor right away. Learn how to underwrite deals, and find an agent that knows how to underwrite deals too. And when I start running my deal analysis on these deals that these turnkey providers have, they just don't match up, right? Or they're not even close. Not even close. They're saying something that's going to have a 10% cash on cash return. I'm seeing this thing negative cash flows. And so to me, that's just where I get really pissed off. And then not being upfront about the class of the neighborhood, right? They're telling you this is a B class neighborhood and it's really a D class neighborhood. That's just borderline dishonesty. And where I hear the horror stories are they just went through this whole process. The turnkey provider made it real easy. They get it. One, the turnkey provider sucks as a property manager. The tenant that they placed was a terrible tenant. And then they have all these problems right out the gate as soon as you buy the property and the funds are wired. And then all these problems start to manifest, right? And so I think what we're trying to stress with the episode today is that as an investor, right, there are so many ways to make mistakes in real estate investing. And you're going to make those mistakes. Mike and I have a whole episode on all the common mistakes that investors make, and you're going to make those mistakes. That's fine. There are no shortcuts in this game. There are no shortcuts in this game, and you should be very skeptical of anything that appears to be a shortcut. And you don't want to be, one of these cautionary tales. And I'll be fair. There are probably, a decent amount of success stories with turnkey companies as well. There probably are deals that aren't the worst, that the deals actually said what they're going to be. And real estate is a very forgiving asset class in the long term. If you hold it long enough and you have people paying the rent, real estate is a forgiving asset class in the long term. But what Mike and I are trying to stress to you today is that you need to arm yourself with the knowledge to snuff out the bullshit versus the real. Right. And that's what we want to hammer home today, Mike, is that you need to know how to snuff out bad deals, whether that's from a turnkey provider or whether that's from an unscrupulous agent, Mike, that's just trying to get you any deal, right? You also got to be equally able to snuff out bad deals wherever they come from, wherever the source.
No, that's a great point because, a lot of agents out there, they don't know when their next meal is coming, so to speak, right? Maybe they're a new agent. Maybe they're an agent who's struggling. This is a really tough real estate environment to be an agent in right now and has been for several years. And, maybe they're just trying to push you into something because they think they need a paycheck. You know what I mean? So that's the other challenge. I always emphasize to people, I'm not chasing the paychecks. So I'm going to tell you, bring me the property. I'm going to poke holes all through it. So.
Yeah, absolutely. And so we are solutions oriented here at the Financial Freedom Fighters podcast. So while we're saying don't invest in these turnkey companies, we also want to kind of provide you a solution. And I mean, what I've been doing my entire investing career is buying turnkey properties, but that are just sitting on the market. That's what you need to do. You need to find an investor-friendly agent like Mike that is going to be able to pick out these turnkey properties that are just sitting on the market. Don't give that margin away to these turnkey companies. Do the work with your agent to find and spot the right deals, because all the deals we've bought have been pretty turnkey. And, my definition of turnkey is that there's minimal work that needs to be done to get the properties rent ready on the market, getting market rate rent. You're going to have to put in a little bit of money anytime you're trying to get something rent ready, but nothing that's going to be an excessive rehab. And all the properties we bought have pretty much been that. And that is what you need to find. And it's intimidating in a sense, but it's not that intimidating when you have like the partnership of an investor-friendly agent. So that's the work of being the investor. You have to find the deals. You have to do the underwriting. You have to pick the market. You have to pick the neighborhood, and you have to look and offer on a lot of deals. That's just the work of being an investor. You can't skip that step. What else do you want to say about that, Mike? Because it's entirely possible, right? We've been doing this for years. You help hundreds of clients to do this.
It's multifaceted, right? Like, I could open up the MLS right now and probably go find something, in 20 minutes that would be a pretty decent deal. It might not be a home run, but it'll be a good deal. But also too, like, I'm constantly poking holes and stuff, and I'll tell people straight up, like, no, that's not a great deal, or this is what's wrong with it. A, B, and C. Also too, you have to trust us too, and the trust gets built up over time. But when I say, hey, like, this is a good deal, you can't mess around. You can't try to go in and, play it like loosey-goosey and want to go in 5 or 10% below list price. If it's priced appropriately, I'm going to tell you. And if you want to get the property, you're going to have to be aggressive, and you're going to have to act quickly. And move on. You will write. That's what I tell people all the time. Like, you're going to write a lot of offers.
So this is the choice for you, the investor, right? This is the choice that is kind of in front of you, right? You're either going to take the easy button, and you should expect the returns that are commensurate with hitting the easy button, or you're going to roll up your sleeves. You're going to find an investor-friendly agent that you trust, that knows what they're talking about, that's going to poke holes in your deals, and that's going to help you find the right deals. And you're going to do the work, and you're going to be ready to write those offers. I think that is one of the things that I had to get over, as a beginning investor initially, right? You get so skittish, Mike. You get skittish. It's a big investment. You're not really sure and confident in your skills as an investor, and you just get skittish. And like, that's one of the things that you just really have to get over. You have to pull the trigger. You just do. You have to pull the trigger. And if you don't pull the trigger, you're never going to get comfortable doing that. And that's where you're never going to get the deal. You're just never going to get the deal. And then you're going to come back and be like, oh, well, I'll just do the turnkey thing. And then you're going to get a bunch of bad deals, and then you're going to quit real estate forever. And you're going to be like, real estate doesn't work. Then you'll be part of the masses that think that real estate doesn't work. So you just can't skip that step. And I think that's what we want to emphasize here on the Financial Freedom Fighters podcast. You have to put in the work. Don't take the easy button. If you are looking at these turnkey companies, at least arm yourself with the underwriting knowledge to be able to poke holes in their underwriting. Still do your due diligence on the market and the neighborhoods that you're putting yourself in. Like, honestly, just try to find the property in the area and look at that area and just try to figure out if that's even a good area. Even if you are doing the turnkey thing, still assess the property as if you're not, and try to run it through the same filters and the same criteria. But again, I really just don't think you should. Like, we have to take a firm stance. I don't think you should do turnkey because the likelihood, in my view, is higher than not that you're going to get a bad deal. And that's not what we want here on the Financial Freedom Fighters podcast. We want you to get good deals. We want you to get deals that allow you to stay in the game, because we know that the real money is made in the long term. So you need to be picking up deals that you're comfortable with, picking up deals that you can continue to do for a long time, so that we can all achieve financial freedom together, and then be sipping Mai Tais on the beach. Right, Mike?
Yeah, absolutely. Whatever your flavor of choice is, pina colada, strawberry daiquiri, Mai Tai, whatever.
There you go.
We'll have a big beach barbecue, right?
Mike, any closing thoughts on kind of the topic of turnkey today?
Yeah, once again, I'm not here to, I don't want to shit on everybody, because there are some decent, providers out there. More often than not, though, I see bad deals coming from most of these large, providers. I've had multiple people call me over the years, bought from people who just found me, right? Either through Bigger Pockets or Facebook or Instagram or referral from somebody. And they'll call me and say, hey, yeah, I bought this property from, XYZ. and it was last year, and it's just been terrible, right? We had to do an eviction, and then it cost me $3,000, and then I had to do this, and I want to find out what the property's worth. And on several occasions, I've like ran a CMA for them, and the property, I can't even justify selling it for what they paid for it, let alone, getting them any type of profit out of the property. So yeah, it's tough.
Yeah. So, I mean, look, at the end of the day, if you're listening to this podcast, I know that you are serious about wanting to be a real estate investor. So, just be weary of anything that appears to be a shortcut, because there just are no shortcuts in this game. And just roll up the sleeves, do the work. And I think the most important thing, Mike, at the end of the day is that first deal is so important. That first deal is so important. And the experience that you have with that first deal, for example, I bought a rental property completely on accident. It was supposed to be a primary. I've told the story a bunch of times, in Portland, Oregon, ended up turning into a rental property. And just the fact that I got a tenant in there, the fact that the rent covered the mortgage, and the fact that I had a property manager that was decent in that market. And then I saw that all play out. That unleashed a whole host of thoughts in my head about the possibility of doing this at a high level, because I had done this all completely by accident. And I said, if I can do this with more intentionality, if I can do this with a little bit more effort and a little bit more work, then I can really make this happen. But it was all because I saw it play out in that first kind of accidental deal. And that's why the deal is so important. That first deal is so important, because whether you have a good deal or whether you have a bad deal or whether you have like an okay deal, it's going to dictate if you do the second deal. And if you have the terrible first deal, which so many of these people that buy from turnkey companies end up having, then you might just think real estate doesn't work. And that's not true, as we know. You just have to get a deal, get on base. Don't swing for the fences. Don't look for the easy button. Find a great investor-friendly agent like Mike that you trust. Learn how to underwrite deals, continue to listen to this podcast, and just get on base. That's a little bit of a shorter episode today. I hope you guys are doing well. If you guys enjoyed this episode or any other episode of the Financial Freedom Fighters podcast, Mike and I would really appreciate kind of a 5-star review. We put a lot of effort into these podcasts, sharing as much knowledge as we can with you guys. So we really appreciate the 5-star review. Mike, if people want to get in touch with you to do deals in Cleveland, where can they reach out to you?
Yeah, you can reach out to us on Instagram or Facebook at Realtor Michael Magno. Got the YouTube channel up to almost 100,000 views this year. So if you could go give me a subscribe, that would be awesome. Working with my guy Alex here, doing my socials and doing some video content. I enjoy putting the videos together and helping people, right? Helping people. That's what we're about. So
absolutely. So go give Mike a follow on all socials at Realtor Michael Magno. I am Jacob Sandoval on all socials at Cashflow Saga. Also doing a lot of work to get my YouTube game up. So go ahead and give me a follow on YouTube as well. We'll see you in the next episode. Peace.
See ya.